We are live. Welcome in, guys. Welcome in. Happy Thursday. I think we're live. I had some technical issues this morning. We're starting late. We are starting late. Welcome, guys. I had some technical issues this morning starting the stream. How is everybody doing? Welcome in. Joshua. Dog's barking. The dog is barking. Welcome in, everybody. Joshua, thank you, Joshua. That is awesome. You were very kind. Welcome in, everybody. Happy Thursday. Did you guys have a better Wednesday than me? Did anybody get cooked yesterday? I got cooked yesterday. They got me yesterday. I'll show you where I went short. I went short yesterday in SPY. Had the right idea, right? I think the right idea was valid. The little bear flag intraday was valid yesterday's session, but just couldn't get the market to go, right? And now, of course, in the pre-market session, we're seeing that gap down. We're seeing that gap down. Obviously under 586 now. We'll talk about the levels today, right? This is how trading is sometimes. Sometimes you have the right idea, just can't get it to go, right? And that was yesterday's session for me. And granted, kept things organized yesterday, right? It wasn't necessarily a overly bad day, but it was certainly not a good day, right? And we'll talk a little bit about that price action yesterday, which made it kind of difficult. I mean, even if you went long yesterday, it also was quite an easy day to lose money, right? Especially when you have these days where you just kind of do nothing, right? Both sides don't win, right? You have a day where either sellers off the open one or buyers off the late afternoon one, and that was kind of all it was, just a sort of balanced day. But today's session is not really about that, guys. Today is about big data, right? So today's session, we have very big data coming out, and the data that's come out is retail sales month over month, and that's been released about 7 minutes ago. And the data is as follows: April data. 0.1 versus 0.3 for retail sales, or that's for retail sales, it's core retail sales. And then for PPI, which is the producer price index, we have met expectations, 3.1 versus 3.1 expectations. So that's all we have today's session, is pretty much just data meeting expectations. You're seeing a little bit of a pop right now in the pre-market session, but nothing considerable, right? The reason why I want to say something considerable is because I made some adjustments to my levels this morning, right? And we're going to talk about the adjustments I made. I adjusted my 585 level to 586. I put main focus in the 583, and we're going to talk a lot about what's going on here. And the reason why this pop that we're seeing right now is nothing to be considered really bullish yet is because we're still under that previous set of lows here from yesterday's session, 586. So we'll talk about it. A lot to go over this morning. What I want to do is I want to first talk about earnings reports. Baba, Walmart reported earnings in the pre-market. Walmart is pretty much flat. Baba's down pretty badly. Nothing really crazy today on the earnings docket. On the economic docket, I already spoke about it. PPI retail sales have come out. Obviously, you guys already know what those numbers are. Retail sales being pretty much expectations, and also that PPI being also sort of precisely at expectations. So besides that, we have Jerome Powell in about 2 minutes. So he's speaking in 2 minutes, so be careful of that going into our opening bell. We also have 10 o'clock data. We have business inventories and housing market index at 10 o'clock. Okay, so I want to spend the entirety of today's session on our charts. So what we're gonna do is we're gonna dive right into everything. So this is how many? We have 1,000. We have almost 1,000 people here this morning. We have 1,000 people here this morning, and we have 176 likes. So let's get the likes up, guys. Some of you guys can. It helps, and I will dive into our charts. So yesterday, battle, right? Yesterday, absolute battle. The reason why yesterday was a battle was because I had come in the market with a pretty short bias. My main watch was going to be looking for an aggressive move up following our CPI release. I was looking for a reversion play on Wednesday session for that move down lower, right? Now the question was, reversion was the right idea, right? So you did see that what we had a gap up in the pre-market, right? And we did find good areas for entries, and I entered at both of these wick highs here, I entered puts here, I entered puts here, and I did get a move down each time. But in either case, the market didn't really break any key levels. And that was an important part about yesterday's session, was the market never broke any levels, right? We just sort of projected off of a supply, right, after big CPI release day prior. We pulled back to our demand lows here at 586, and we just held demand multiple times, and that was it. We projected off supply, but we've also held demand. It was a very balanced day yesterday. So yesterday's session was a day where nobody really won. Bulls did not win, and bears also did not win. So when I was shorting the highs over here and getting out at 10%, right? Well, those were fine. But then when you short the demand lows, right, and you add into a retest level here, you're going to lose money. And that's where I got stopped out on my third trade of the day. This is where I lost actually majority of my money yesterday, was shorting back into demand lows, right? That was the key thing that happened yesterday's session. Now, granted, did we look like we were going to break down? Yeah, we did, right? The market looked like it had juice to the downside, and market was broke under the ES 5900 level, which in my opinion was a valid level here on the ES chart, but not really on the SPY, right? And that's why I made some adjustments on the SPY chart this morning. The adjustment I made on the SPY chart is for the fact that 586 is a critical level, right? It is our Wednesday's lows, and it was our breakout level from Tuesday's session. So going into our session today, because we have that breakout level from Tuesday 586 and the lows of our Wednesday session 586, the key level to watch out for in this morning is going to be 586. If we can turn this 586 into a lower high today, we could look for that downside move back into 583, right? What you should be watching for today is you should look to see, hey, can we turn these set of lows, 586, and the breakout level 586, can we turn it into a rejection point today, in which case we can look for a move down lower back into 583. That's the first thing I'd watch today in the SPY chart. Can we turn these set of lows and that breakout level into a high, in which case this would be a lower high formation here in the 5-minute chart for a downside move back into 583. That would be the top watch you're looking for short plays today. But if the market does break and hold back above 586, then at that moment, I don't think we have any reason to go short, and we likely just grind higher back into that 589 level, back into our Wednesday's highs. So the key thing to note, the mistake that was made yesterday was not recognizing 586 as a critical level of demand. If you shorted the highs, great, right? The first trades that I was taking on that day was actually shorting a high, right? You got to move down lower. But if you held back into demand lows yesterday, that was your mistake right there. Now, today's session, what you should be looking for is, are we under the 586, in which case we can look for moves down lower back into 583, or are we above 586, in which case you should expect us to grind higher back into the highs of Wednesday's session, back into 589, and this is a move you don't really want to be short against. That, in my opinion, is what we have going into our session, right? It's based upon how we respond to 586. If we fail lower today, let's just say we fail lower today, you nail the put side, you get a move down lower, you also only can be short back into 583 because 583 is that Monday set of highs. It's that Tuesday open level, right? That Tuesday open level, Monday's highs and Tuesday open level that we have as demand going into our Thursday morning. So what I'd watch out for today's session is that I also watch to see, can we pull back to 583? Because if we do pull back to 583, that's a long opportunity without any hesitation. This is a long opportunity. You can see here, we have a demand built up over here, and we can trade off of that 583 level. And you can see we've already kind of tapped that level in the pre-market session, but again, it is still technical demand that we can trade off of this morning session. You are seeing us in the pre-market, you're seeing us begin to reclaim the 586 today, and this 586 reclaim is going to be an important watch today, right? If we are above 586, we should not really be shorting the market, right? We should expect us to grind higher back into that 589. On the QQQ chart, it is actually, let's do ES first. On the ES chart, this was the mistake yesterday. The mistake yesterday was looking at 5,900 as a critical level and not adjusting for this, not adjusting for that Tuesday breakout level, which was at 589.96, right? 58.96, right? So if you're going to mark this level properly now, you see that this whole area over here is what you're watching as technical supply this morning, right? It's 5,900 ES all the way down to 58.96, 58.95, right? That's what we have to see turn into a rejection spot this morning. Because if we turn this into a rejection spot this morning, what does this look like then? Well, if we do turn this into a rejection spot here at 5,900 ES, right, then we could look for that failure lower and move back down into our 58.70, which again would be our critical demand below. So the levels this morning are pretty simple on the SPY and ES chart. It is simply 5,900 ES, it is 58.70 ES. Big demand below, big supply above. Do we get above supply? Then back into our highs of Wednesday session. Back into the bull trend. We are still in bull trend, obviously, but we're back into the highs of a Wednesday session, right? Or if we pull back today, you could look for the long side trades here off the 58.70 because again, that is critical demand below. So all we're doing is just trading the levels in front of us, right? So you have Monday's highs. Can we turn that into a bounce opportunity today? I think yes. If we do pull back to it, we can look for longs there. If we begin fading here off the 5900, right, then this is your short right now. And it could be very quick off the open. This is probably the only short that you want to be looking for today. If you are looking for puts, this is where it is, right? This is the only area where you can really short logically, right? It's going to be turning these sets of lows, these breakout levels into a high here. And again, on the SPY chart, you're seeing it react, right? You're seeing the reactions pre-market. Let's see what the market does this morning to see if we can capture a trade here off of that supply rejection. And if you don't capture the trade off of supply rejection, right? If you miss the supply rejection today, you see us trend down lower, well, you don't want to short back into this 583 level because 583 is technical demand, and that's where you can see market begin to reverse. And on the QQQ chart, it is even more clear on the Qs. On the Qs, you can see here that the level to watch out for is that Monday high, right? You can see here Monday's highs, Monday's highs, Monday's highs. And again, Tuesday breakout level, right? So if we do pull back today on the QQQ, what you should be looking for, and this should be your top watch today for pullback longs, is going to be the 509 pullback level. This is your top watch for longs. The market eventually, at some point in time, will pull back to this level. I don't know when, but it will, right? The market still is obviously very much so uptrending here. It's very much so uptrending. But at some point, logically, we must pull back to this 509 level. Again, it's that Monday high area. And if you go back to SPY's chart, go back 2 minutes ago, you see exactly that Monday's highs on SPY is that 583, right? So 583 SPY equates to this 509 here on the QQQ. So if you are looking for pullback longs, that's where it is. And if you're an NQ trader, and we're gonna throw in a little NQ action here for a second. If you're an NQ trader, what are you watching? It's 21,000 NQ, right? It is right here in front of us. 21,000 NQ is simply that Monday's highs. I think here's the thing. If you want to get sweaty, here's what you do. If you want to get sweaty, you look to see, can we turn these sets of highs here into rejections for a move lower? That's a sweaty trade. If you want to look for a more clean trend-based entry, look for pullback long stay on the market to 21,000 NQ, which would equate to 583 SPY, which equates to the QQQ 509 level. And that's what you're doing today. Do you want to be looking for pullback longs, or do you want to short back into demand? It's up to you. Both are valid. I think you can try doing it. Yesterday's session, we tried shorting into the highs, and it really was not so effective. Today's session, it may be effective, but you can only short back down at a 583 because that's where demand steps back up on the overall indices. Okay, so I hope you guys understand the levels. We made some adjustments from yesterday's session into today, right? We got rid of some levels, we added some new ones, and I think this chart to me is really clean, and we can trade off of it. Again, 586 rejection points, 583 is demand below. If we lose the 583, I don't expect any buying pressure here into the 576, right? I would expect this sort of drop to happen if we lose 583. Again, levels are very important. Kwame Sante, thank you. That is very kind of you. Welcome. I guess that's the YouTube live member. That's cool. That is cool. Welcome in. So let's move on. I want to go over our main watches today's session. So that's what we have on the indices side. Let's dive into our takers today. Let's talk about Apple first. So Apple. Apple was my main watch yesterday session, right? And we spoke about this yesterday. We spoke about the idea of the 214 breakout yesterday. Yet again, Apple is rejecting under 214. You can see multiple cases of rejections now, right? That's an arrow. There we go. Proper arrow drawn, right? 214, 214, 214. You guys know what we must wait for here, right? It's simple now at this point, right? It's very simple. What you must wait for now is you must wait for this. You must simply wait for the break, the retest here, 2.4, turn into support, upside move back into 218, right? That's what I'm looking for now on the Apple chart. Can it break 214? If it can, that's my top watch. If the chart does not hold today, which again, it is not holding right now. You're seeing the market begin to sell off a little bit here in the pre-market. If we lose 207, if we lose 207, then this gives up a massive gap fill back into 202. So even though I've talked a lot about long side here on Apple, we can also trade it short side, but under that demand zone, right? So under this demand here, 207, look at this for a second. Just take a second to look at this chart here, right? And you're gonna see exactly what I'm talking about. If we lose 207, which you're seeing here on the daily time frame, wick low from Monday, the 12th of May. If we lose that low here at 207, we gap fill back into 202. So if you want to trade this Apple chart today, what you're going to look for today is you're going to look to see, hey, can we break and hold above 214? In which case, long side back into 218. That's obviously, we've already spoken about that many times. But if the market does flip and the market gets weak, right, you could look for the gap fill potential under 207. Under 207 for puts for a move back down to 202, right? Again, the levels are pretty simple today. Watch 214, watch 207 here in Apple, and that's all you're going to do moving forward, okay? You don't want to short back into 207 though, or you don't want to be short here. You don't want to be buying puts as the stock is retracing back into 207. Again, this is still demand. That still was a breakout level in Monday session. So don't be short there. You can only be short if that happens, right? Again, a break and retest failure under 207. That's where things become good to the short side. And you can look for that move down lower back into 202 for that gap fill, okay? Amazon, Scamazon, little Scamazon, Amazon action, right? What did Amazon do yesterday? Amazon yesterday broke above 210 on Tuesday session. Wednesday session, it chopped around and did nothing, right? This again was a theme of yesterday's session. If you got burned yesterday, it's not your fault. The market just simply didn't move much, right? We pulled back to 210, we held 210, we failed 210, we broke above 210, we failed 210, up, down, up, down, up, down. I'm long, I'm short, I'm long, I'm short, I'm long, I'm short, and you got smacked. You get smacked in the head, right? Amazon's chart is extremely ugly yesterday's session, right? So again, don't be upset if yesterday was choppy for you. Again, that was kind of what happened yesterday. So what can we do now, though? What's the theme? What can we do now in this chart? Well, we have a level here at 206.50. You can see 206.50 as a pent-up demand here. You can see 206.50, 206.50. You see demand stepping in here at 206.50. Jetson, you are awful, man. Thank you. Jetson, you were absolutely awful. And Taven, thank you very much. Yes, we'll go over UNH. We'll go over UNH. So here on the Amazon chart, you can see here that we have demand here at 206, right? 206.50, 206 is your demand. You don't want to be short here because again, this level of support is what? Is our previous March 25th highs, right? It's our previous March 25th highs turning into support right now. Right, so even though Amazon had a scamazon day yesterday, right, where it was scamming up and down between 210, I think the level to watch out for is simply just this 206.50. If we can hold 206.50 here on Amazon's chart, this is your top. This is your main long side trade right here. It's going to be a pullback long here, 206.50, 206, turning these previous highs into support for an upside trade. Right, that's your first case and best case scenario here on Amazon. If we do lose 206.50, in this case, I would say 206 for good measure. If you lose 206, that candle low here, that demand low, that candle low here, 206, then we go lower and we go a lot lower, right? We go lower and we likely fill the move back down into the 194 here in Amazon's chart. So the reason why I'm saying that is because, again, gap fills across the board, right? We must understand this. The market's overextended, but we are pulling back to some demand here. Do we hold demand here in Amazon? If we do, upside trade, right? Look for longs off 206, 206.50, stop loss, 50 cents underneath that level. Very simple stop loss. If we lose 206, then short it, look for the gap move down, the gap fill play down lower, and then move back into 200 and back into 194. That's where the gap fill ends here on the Amazon chart, right? That's all I'm watching today on Amazon. On the Tesla chart, on Tesla is a strong name. Tesla has been strong. Tesla's been grinding higher. Tesla's been moving relatively strong against the overall market. Here on the Tesla chart, though, we spoke about the idea of this chart just going back into 362, which I think still is the idea here. Either what's going to happen is it's going to just grind higher back into 362, which is our supply zone, right? And it's not going to give you much opportunity for longs. This would be your worst case scenario. Or you look for this to pull back, right? And the best case scenario here on this Tesla chart is going to be some sort of pullback long opportunity. And if you go to the 15-minute time frame, where are those pullbacks sitting? Or where can we logically go long here on the Tesla chart? The most logical long spot is going to go back into that Monday's highs. Again, a theme of what we're noticing in the market, this is a common theme, is Monday's highs. If we can pull back to Monday's highs on these stronger names, that's what you're watching for long side trades, right? So Monday's highs is this 324, 323 level, right? So if we can pull back today on the Tesla chart, you're looking for long side trades here off this demand. That's all you're doing today here on this Amazon or Tesla chart, on Tesla's chart, right? Again, Monday's highs, Monday's highs. If we lose 324, next level is back to 312. If we lose 312, I would not long this anymore. I would look for shorts, and I would short everything for a move back down lower to 270, back into 295 first, back into 270 secondary, right? So again, what I would do here on the Tesla chart this morning is I'd be first watching this level right here, 324. If you are a Fibonacci trader, Fib traders right now are going crazy. Why are they going crazy? Because again, they are looking at that 61.8 lining up perfectly with that Monday's highs. That's what they're doing today, right? They're looking to see, hey, can we pull back that 61.8 back to that Monday high level? And that's what they're targeting today, right? So again, what I'm looking for today in Tesla, and I may be a participant here, I actually will be a participant here, right? This will be on my watch list this morning, is going to be a 324 pullback long, right? That's it. That's all I have here on the Tesla chart. Okay, that's what we have. And again, obviously, don't do this. Don't do this. Don't do this, right? Don't look for longs and say, oh my God, market's going higher, and you buy calls there, right? Just don't do that. As long as you don't do that, you're fine, right? Because this is the worst thing you can possibly do. Don't do that, okay? Amazon. Why do I keep saying Amazon? Nvidia, NVDA. Nvidia. Maybe the market gods want me to trade Amazon today. So here on Nvidia's chart, Nvidia incredibly strong, right? Incredibly strong, and it continues to turn our demand, our supply highs into demand, and we grind higher, right? Now, our balance level yesterday on Wednesday session was 131, right? In the pre-market, we said, hey, let's look to see, can we turn that Tuesday high into a low here Wednesday session? And we didn't really do that, right? Because if you look at this, the reason why yesterday was tricky was because we didn't really tap demand yesterday, right? This chart was a prime example of that, right? We pulled back to our 131.78, which obviously is not our demand lows, and we just ripped higher, right? No demand pullback. This was an early entry, right? What we needed to see yesterday's session was a pullback to this 131 to 130 area here on Nvidia, and that would have been a pullback long. This would be your optimal long entry on Amazon. Pullback longs to 131 to 130, stop losses $1, very reasonable risk. You can look for long side trades there. That was what I'm watching today here on Nvidia's chart, is if we can pull back to this, if we can pull back to this level, right? If we can pull back to this level here in Nvidia, 130, 131, we can look for long side trades. That's all we have here. If we fail under 130, if we fail under this low right here, and I'm going to make it a red line, right? A red line here in Nvidia. If we fail under 130, then I would expect this to pull back to the Monday's highs. That's my expectations, back into 123. Because again, the way the market works is when you see a massive upside move, a large magnitude upside move initially, if we give up that magnitude, if we give that level, that same level, the upside, back to the downside, you should expect an equal and opposite magnitude move down back into 123. So if you are watching Nvidia today and you say, I want to short Nvidia, get that thought and throw it out the nearest window, because you don't want to do it unless it does this. If it does that, then that's your short, okay? That's your short opportunity under 130 today in Nvidia. That's all we have in Nvidia for shorts. For longs, it's just simply 130, 131 long side trade, and 123. If you get this opportunity right here, if you get a pullback to 123, this is a gift from the gods. This is a level that I would take without any questions asked. Not financial advice, but that's something I'm watching big time, right? 123 pullback long, Monday's highs. If we do pull back there, we should see likely a few dollar reversion play off this level. So watch the 123. I will scalp the hell out of that one. You can also watch 130, 131. Again, we kind of tapped it yesterday, but it's still something to watch out for into our morning session, right? And again, if you are a shareholder here in Nvidia, don't be scared about what I'm saying, because I'm saying pullback longs, I'm saying demand pullbacks, but you have to understand the larger term picture here is still very much so bullish. And the larger term picture is that we probably go back into 160 plus here on Nvidia, right? In the larger term, that's where we go to. In the short term, though, you can't be buying calls back into highs here. Look for pullbacks 130. Look for pullbacks 123, right? AMD. On the AMD chart, kind of similar idea to what we spoke about on Nvidia, right? Why was yesterday's action so tough? Well, it was because if you did not short the highs yesterday's session, you were stuck looking for demand lows, and you did not get any demand pullbacks, right? We did not pull back to demand yesterday. We pulled back to 117.50 and to close 116.50. We didn't tap our demand. And now in the pre-market session this morning, we are finally tapping our demand zone. Black Trump, thank you much. I don't know if that's, I don't know if it's, that's not, definitely not your real name. It's definitely a fake profile, but Black Trump, thank you very much. Much appreciated. Thank you. I feel like I'm gonna get canceled. 116 level. That's your key thing to watch out for. Obviously, watch that today. If we do lose 116, then where do we go to here at AMD? If we lose 116, we go back to 113, right? 113 and 110. That's all we have here on this AMD chart. Okay. Yeah. Okay. Moving on. SMH. On the SMH chart, you can see here SMH obviously strong. I mean, what's going on here is we're seeing some reactionary sells come in here, right, off of this level. This is all we're seeing is some resiliency, right? And we spoke a little bit about this yesterday's session, about the idea of there being some resistance here at 246, 247, and I think it's becoming more and more clear that that's the case. You're seeing that this again is a clear level, and we did talk about this going straight to the 260 area, but it's possible that we were wrong about that, right? It's possible that we do see it begin to fade earlier, right? And you're seeing some signs of that this morning. You're seeing some signs off this 246 level, right? So be careful at 246 on the SMH. This could be where you begin to see some pullbacks, right? If we do break and hold above 246 on SMH, right? If you see us break above these highs here, right? Then that's your upside trade back into 260s. But if you see us begin to fade here and fizzle, which we are right now, then that could be the logical case for a pullback back into our demand lows. And this would be totally expected and normal, right? So again, we spoke about us being very bullish on semis yesterday, and we still are very bullish, but you don't want to see this on semis. And this is important. I will always tell you guys when I see something that I'm wrong about. We said we were always so bullish on Wednesday, but then Thursday session, right? You come into Thursday session, and what are we seeing here? What's going on here that's making me say, you know what? Maybe we're wrong about that idea, right? Look at what's going on here. Tuesday's highs into Wednesday's lows, turning into a rejection here pre-market. That to me is not bullish right now, right? If you're going to be bullish, you got to be above 246, upside trades there. If we are under 246, which we are right now pre-market, look for downside moves lower, and that's what you expect to carry over and bleed over into the other chip names, which of course Nvidia, AMD, SMCI, right? The whole Shazam of those chip names. Obviously SMCI probably still strong, right, after that big upside move. But again, same idea here on SMCI, right? If SMH begins pulling back, well, it's also going to impact the SMCI chart, right? Here on SMCI, obviously your level still is 44, as we spoke about yesterday. This is simply just a beautiful breakout bull flag back into previous highs. If you can turn these previous highs into support, which we are right now, this is your long opportunity to move higher here on the SMCI chart. So again, even though we have some discrepancy here, SMH being a little bit iffy, SMCI still is obviously bullish as long as we're above 44. So be aware of that on this chart here. AVGO. On the AVGO chart, nothing really of importance here. I just, at this point, you're just back in major supply, right? You're back in major supply here, 237. Nothing to see here in AVGO's chart. Let's move on, guys. Let's go over some other charts this morning. Let's go over Meta's chart. On the meta chart, 660, right? 660 is your meta level, right? Making some adjustments there. Before it was 658. We are now adjusting that to 660. The reason why is because if you go to yesterday's session, you're going to see, I mean, just look at this action yesterday, guys. I mean, is this day yesterday? Is yesterday's session a day where you should be going crazy, right? Look at the action yesterday. I mean, this to me is indicative of something. If you have meta, right, looking like this yesterday's session, and you had a bad day yesterday, you should not be upset, right? Look, if you had a bad day when the market was doing this, if the market was doing this, right, something like that, okay, you had a bad day. Well, you did something wrong, right? You did something wrong if you had a price action like this, like just trending price action like this, you did something wrong. But when you have a day like this on meta, right? This is obviously nothing was innately wrong with your trading yesterday, right? This is just the fact that the market was in a sluggish mode yesterday. Now, going into our session this morning here on meta, well, what can we watch out for? Well, meta's chart is simply the same as every other beta name. It's look to see what happens with Monday's highs. Can we turn this 635 into support? If we do, that's your long opportunity. Now, I'm not a huge fan of Meta. I prefer Nvidia. I prefer even Amazon, right? I prefer these names more so. But if you are trading Meta, the one thing I'd watch out for in Meta is I'd watch to see, can we turn 634, 635 into support? Can we turn this gap down on the Meta chart into a long opportunity here off the demand lows? That's what I'd watch out for. If you're going to short it, right? If you're going to short this chart, you know you can only short this chart back into our demand here, 635. That's it, right? That's all we have here in Meta's chart. So if you're going to short it, you're probably shorting, actually, you're probably shorting here. You're probably shorting this level right here, 655, right? If you're shorting, you're looking for 655. So 655 turning our Wednesday's lows, our Tuesday level, into resistance. That's you're looking for shorts. Or for long side trades, you're looking for us to revert back further into demand here. Monday's highs turn into demand here. That's all we're doing here in Meta's chart. Look to see for shorts here and longs there. Again, that's what I do here on the Meta chart. Right. Let's go over one last ticker, guys. We did not go over everything today. I know we kind of we'll do UNH. We'll do UNH, and then we'll go over Microsoft and PLTR. So three more tickers. So on the UNH chart, obviously what's impacting this right now is there is a probe being launched into UNH investigating them for criminal allegations on UNH. This is obviously not good, but every single time something like this happens to a very big beta name like this, in this case UNH, right, I would expect at some point for things to clear, right? And I know it's difficult to be buying when the market is moving down like this, but this is the exact wrong mindset you have to have. This is the mindset is you should be looking for longs back in demand, right? Now, I don't really know the extent of the news here on UNH, so maybe I shouldn't be talking too much, but the technicals here are screaming, right? The technicals are screaming, look for longs here off 285. That's it, right? The technicals are saying look for longs here at 285. The fundamentals, we'd have to see what is happening here on the company. Obviously, I know it's pretty bad, but if you guys remember, excuse me, SMCI also had a very similar thing happen to this company, right? And where is SMCI at right now? It's actually reverted quite nicely off of our almost 155% off our demand lows. So interesting comparison going from SMCI now to UNH, right? Obviously, a little bit different in terms of the nature of what's going on here, but very similar allegations. So watch to see now if 285, 284 continue to support. If you can, look for long side trades off that level. That's all we have, okay? Microsoft, MSFT, Microsoft, I mean, obviously just back at all-time highs here, right? We're just sitting at all-time highs here off this 456 level. I would not be long into all-time highs here. That's all we have here at Microsoft. PLTR, you are sitting here, you are watching to see, can we turn 125 into support? If we turn 125 into support, that's your long side opportunity. It's right here, right in front of us, 125 here at PLTR. Pull back longs here, demand. If you hold there, long side trades. If you lose 125, then look for this to move back lower into 115. Okay, guys, thank you all for joining in. A lot of you guys are here this morning. You guys are awesome. I know we didn't go over everything. I started a little bit late this morning. I had some technical issues, but I appreciate everybody who's here, and I'll see you guys all for live trading. Bye, guys.